Hi everyone, and welcome to this afternoon, or it's afternoon here in the UK for us, webinar. And I can see from the list of attendees, some of you were with us this morning, so it's lovely to have you join us once again. And I also see there are some of our quantum users, and I can also see some of you who have very kindly emailed me because you have bought some of my books on Amazon on volume price analysis. So wherever you are in the world, however, whatever your connection to us is, welcome. And of course, I see some new names that I don't actually recognize. So if it's your first time with us, welcome to you too as well. But before we start, as usual, may I draw your attention to the disclaimer that you can see on your screen. As you know, this business can be extremely risky, so please don't ever think of using money that you cannot afford to lose. Right, what are we going to do in today's webinar? Well, this session is predominantly devoted to the indices. We've got, I think, commodities. David is, I think, got gold up. And we do have a little look at the Forex, sometimes just to carry on from this morning, particularly if there's been some interesting price action from a VPA perspective, or you know, how we use the quantum indicators that David and I have developed. And if you're with us this morning, this is my workspace from my MT5 platform for the pound Aussie pair, which I just want to just very quickly whiz through, because it's a profile. If you use MT5, the great thing about MT5, apologies about that. David just suddenly dashed off. I think one of the dogs started kicking off. We've got someone at the front door. Anyway, as I was saying, I've got MT5, and there are a number of reasons why I like this platform. One of them is you do have a lot of time frames to choose from. You don't have the seconds charts, but you certainly have a whole raft of minute charts, hourly charts, and then you've got the day, the weekly, and the monthly. David has got his Ninja Trader up, and I think he's also got the TradeStation up as well. Well, certainly with some of the indicators, as you know, we're developing for TradeStation, and we're not quite at the point where we'll be able to release the indicators, but it's been an interesting exercise for a number of reasons. One of them is which we've, because of the platform and the sophistication of the platform, we've actually been able to tweak some of our indicators, and I think create new ones as well, or derivatives of the ones that we've got. Anyway, all sorts of exciting stuff that's going on. The narrative for the these webinars that we've kind of introducing over the last two sessions, David, is we're kind of looking at what, as a trader, do you need to recognize in a chart? What is the sort of setups that you are looking for in order to take a trade? And there are, you know, I'm not saying there are thousands of setups, but there's any combination of setup that you may want to use before you take a trade. But before you do that, one of the things you really do have to understand is, what is the chart actually telling you? In other words, what we call the C state of that chart? Is it in a trend? Is it in a congestion phase? Is it at a point of reversal? Because if you don't understand that those very fundamental principles of the chart, forget about even multiple, you know, before even moving to multiple time frames, you know, you'll come across on the internet and books, you know, use this tactic, use this strategy, you'll always be successful. Well, that's not true, because if that were true, robots, quants, they would be wiping the floor in this market. You know, automated strategies, automated strategies, and all that, you know, that trades are triggered on a chart when a predefined set of conditions are met. They work some of the time, but there are so many variables in the markets that when they develop an EA, an expert advisor, a robot, call it what you will, it is usually developed for a particular set of circumstances and a particular market condition. Now, that market condition may occur, but it won't be the same all the time. So, as I said, understanding the C state, what is the chart actually telling you at any given time, and then seeing how that stacks up in multiple time frames. And what we saw this morning in the pound Aussie, it doesn't matter that it's the pound Aussie, this could be any other instrument. And the best way I can describe this to you and help you understand is to actually show you on a practical basis. So this is my profile. This is the Renko chart that I have. This is my non-time-based chart. Because I am focusing on the faster time frames, I like to use a chart where all I'm looking at is price action. And I look at that in combination with the time charts that I have. So this is my Renko chart. This is actually set to 3 pips. But what the Renko has a number of advantages, but it also has one key advantage in that you can see clearly by what I mean about the condition of this particular chart. If you move over to this side of the chart here, this was this morning, this was the beginning of the trend in this particular pair. This is what we call a primary trend, and it was really practically unbroken. On the time charts, the beginning, this trend initiated on the 3-minute chart as a breakaway from what we call the volume point of control. It's that part of the chart which is the fulcrum of the chart. It's where you have its support and resistance through the prism of volume. Given that markets spend an awful lot of time in congestion, it's really important to recognize which of those congestion phases on a chart are the key, if you like, to a move happening or not. So this was where it happened. This is what we call a secondary trend, a pullback. We know it's a secondary because obviously the price action rolled over. We've also got our pivots here. We had a change in trend dot, but we didn't have a change in the trend monitor. It only went to this intermediate cover before the primary trend was reinstated. We've actually had this twice. We had another secondary trend, and then we had the reversal. And I actually said this morning that look out for the reversal when the US session came on board. And in fact, that's pretty much what we've had. We then had a very nice reversal lower, a bit of a secondary trend there. Then we're going back up again. This is congestion. You can see that beautifully played out on a Renko chart. The Renko chart then helps with entries, exits, support and resistance, all the other things that make up volume price analysis. And the indicators we've developed are there to support this our principal methodology. So let's just click that down for a minute. If we go to the 3-minute chart, hopefully it will still be on this chart. It was so far, no, I think it's too far. And I can't actually get it back, and the VPOC's actually moved. But let's move to the 12-minute chart here. This was the as I said, the 3-minute chart. The price action was on the VPOC, looking to break away from the volume point of control. How it corresponded on the 12-minute, we actually saw this 2-bar reversal off the support platform at 86.47. It's about the 86.50 region. You can see here a little bit of congestion preceding that, and this was the 2-bar reversal. Now on the hourly chart, which was quite nice, we actually had the hammer candle. So what I'm talking about, setups, if you like, on charts, not only do you have to see it on the chart where you're looking to take the trade, but you have to look at what the condition of the chart is in multiple time frames and see if you have this confluence of setups. And this was just a really nice example of when all of these things come together. We then look at the price action, we look at the candle patterns. We've got a sort of double bottom down there. Again, this very strong platform. We had an effort to rise there, then a retest of this support line, which often happens, and then we had the move away. And the move away started really in the 3-minute chart as a break away from, as I said, the volume point of control here. So this is the pound Aussie, what's happened. What I also said this morning was in terms of targets, and I think the target has actually moved since then, is the first target was here because this VPOC is dynamic. It actually moves as these areas are built in terms of support and resistance through volume. It's transacted volume. It's pause points in the chart where the market just doesn't want to go in one direction or another, because maybe it's waiting for a piece of fundamental news, or there's going to be a change of session. So it pauses there, and the until we have a break from that region, either up or down, this is where the volume point of control will sit. Now, at the moment, it's moved up again, but it's on the recording that's up on YouTube at the moment. And I believe, was it about there, David, the target that we were going for? I think at that point, it was there at that point. And clearly, it's now moved up because we've now got a period of congestion at this level here, which is 87.68. So we're going to be focusing more and more in looking at these opportunities by looking at the condition of the chart. What are the setups that the charts are telling us? What are they telling us in the different time frames? Do we have a kind of confluence? You know, what are the indicators also telling us? What are the candle patterns telling us? What is the volume? What is the VPA telling us? And then putting it all together and really moving forward from there. So that's it from a technical perspective. Lots and lots going on from a fundamental political perspective, as always. Markets still reacting to what happened with the FOMC yesterday. I think there's also some news that there's some problems with the China-US trade discussions, David, as though they've cancelled out, yeah. I think, and you know, oh, that's right. That was the trigger this morning. Here we are. What does it say? Sometimes the thing is with headlines, even on sites such as investing.com, who I think actually, like all these sites, they do a pretty good job of trying to keep us, you know, ahead of, up to date with these. Sometimes can be very fast moving market. You know, you look at a headline, you have to be very careful, but I think it's pretty much sums it up. Wall Street falls on fresh trade jitters, and we can see here the S&P futures are actually down. They're well over, they're comfortably over 3,000, which also brings us to what we said last week, which on the indices we looked at the Dow futures on the monthly chart, and I think, and I know again, you can go and listen to the recording if you haven't, if you weren't with us at that session. David and I, in our view, it was not a distribution phase because of the nature of the candle patterns within the long consolidation phase that we have had on the indices, and now coming up to 2 years, David. Now it's 2 years, lots of volatility. Again, recognizing the condition of the chart to give you an idea of the trading conditions that you can expect, you know, ahead of you. Right, so that's that. And let's have a look what trading. This is actually a Forex news site that I use, but it covers all the markets as well. Here we are. What does it say? Oh, well, he's always criticizing the Fed, isn't he? And what have you. Let's have a look. Trying to sit, will not sit back and deploy image. Oh, fine. Okay, the usual rhetoric. Let's have a look. They're working on. Oh, that's right. They cancelled out on where they were going to sit down and sign the phase 1 of the trade agreement, but a new location is to be announced. Who knows? You know, it will be when it will be. And as traders, we just have to be aware of it, and you know, deal with the volatility as and when it occurs. If you want to read, let's have a look quickly. This is my site, unless you haven't come across it before, annacooling.com, assuming it loads up. There we are. There are all the books. These are the latest blog posts that mainly the markets, not Forex. I tend to stick to Forex commentary on my Facebook page, and as I said, you will get things such as this illustrated charts, really to explain primary trend, secondary trend, etc., etc. Just follow up to webinars, and also interesting outside resources that I think may help you as a trader and make sense of the markets. The indicators that we'll be using are from quantumtrading.com, and we'll refer to them as we move through the session. Let me just bring my charts back up. There we are. So I'm going to pass over to David, who I think, is you ready for me? He's come back. You always well, you were rushed out. I thought, what the heck's going on? I didn't know what was going on for a minute. Anyway, any questions, please drop them into the chat box. We'll happily answer them for you. Otherwise, I think we'll just crack on.
Absolutely. Thank you. Thanks, darling. And a very warm welcome to you wherever you are in the world. As I said this morning, I hope it's nicer where you are than it is here, because it's pretty miserable. Just pulling the Ninja Trader up. There we go. I'm looking over on Anna's. That's all up and running, so that's great. Hopefully you can hear me okay. And just checking out what's going on at the moment. Okay, we're on. I've got the NASDAQ up at the moment. I've got the time frame 15 second, very quick. I said this morning, I'm not advocating this as a de facto standard that you apply. It's just I happen to like it because it keeps you very sharp in terms of VPA reading, and I also happen to like it when I'm scalping the markets because it's just super fast. And if you can read VPA quickly, then it gives you an immediate heads up as to what is coming up in the 1, 2, 3, 4, 5 minute, whatever time frame you're trading. So I've got 15 second here, sorry. Yeah. Okay, sorry, just I do have the chat box closed, so apologies if I don't answer your question straight away. Anna's just highlighted. Would you say this multiple time frame approach is appropriate? Look for momentum and then trade the pullback. I would say that to answer your question, Summer, of all, choose my words carefully, but of all the technical principles that you can apply, I would say using multiple timeframes is, in our humble opinion, I mean, other people will disagree. Two traders will disagree about any aspect of trading, but if you wanted our opinion, for what it's worth, multiple timeframes are the key to the approach, whatever that approach may be, whether you're using indicators, whether you're just using VPA, whether you're using fundamental, it doesn't matter. And it applies not only to the charts, but it also applies to the indicators, because what you're seeing from a faster, there's two things. First of all, you'll see from the faster timeframes what is likely to flow through into the slower timeframes. It's the pebble in the pond analogy that I've used many, many times. It ripples through. It always starts in the fastest and goes out to the slowest. So that's one reason for using it. It gives you that heads up on what is coming up at you. And if you're using a 3-chart approach, which typically a lot of traders do, and the middle chart is your trading window, if you like, your main highway, the main lane on your highway. So you've got a lane on your left hand and a lane on your right hand. And if you're trading in the middle lane, you're seeing what's coming up ahead of you, goes through your trading perspective, and ultimately, if it's a trend that's developing or a reversal that's developing, it will flow through into your slower time frame on the other side. It's a very simple principle. And the other aspect to it is obviously use that with indicators as well, exactly the same way. But more importantly, when you're looking at multiple time frames, it also gives you a heads up. I'm just going to move the chat box out of the way because it's covering up my chart. Sorry. See what's going on as I'm talking. The other aspect to it is it gives you a perspective on other reasons that a market has paused in your particular time frame. You see levels of support, levels of resistance, volume points of control, different volume profiles, buying and selling. You'll have all sorts of signals which will come up. You'll see, for example, a volatility indicator. It may trigger in one time frame but not in another. It'll give you a heads up as to what to expect. You know, why is this market pausing and adjusted? Well, if you've got a volatility trigger somewhere else, that's the reason why. It's all of that and a lot more. So I hope that answers that one for you. So apologies, I do have the chat box closed when I'm in full flow. Okay, we've got across the time frames, got 15 second, 5 minute, 10 minute on the top, 15 minute down the bottom, 60 minute in the middle, and over here we've got the daily. Just go back onto the other 3 indices, the other 2 sisters with this one, which is, where is it? Here we go. There we go. Right. These are the 3 primary indices in the US. We've got the YM, the NQ, and the ES. The YM is the Dow 30, NQ, NASDAQ 100, and ES is derivative for S&P 500. So we've got 5 minute time frame, exactly the same time frame across the top. Down the bottom, we've got the daily charts for those three indices. They're all on the December contracts now. And the other reason for having all 3 up here, and this is not a multiple time frame approach, but it's a multi-market approach, if you will, is because, first of all, you do get divergence from time to time. I think we had some last week or the week before, where you will see one index which is leading. I think it was the NASDAQ that was leading, or perhaps it was the other. I can't remember now whether it was the YM and the ES leading and the NASDAQ was following, or vice versa. So you do see divergence. Generally speaking, you would anticipate these markets moving together in lockstep, and normally they do. But intraday, you do get divergence where one is down and others are up, and it gives you a heads up as to the opportunities developing, because if you've got two indices which are rising and another one's falling, it's a pretty good signal that, or vice versa, that the two are likely to pull the other one along, and therefore, it's a lower risk opportunity, if you will. What's interesting right now, if I just pop up the dailies, and again, it just highlights that particular point. If I just pull that out a little bit, you maybe can't see it, but this is the NASDAQ. That's the wick on the NASDAQ. It's fallen. It fell on this reaction to yet more uncertainty over China, but it's now starting to recover and pull back. But if you look at the equivalent on the Dow, the size of the wick there is much less demonstrable. So you've got a much wider spread candle with a smaller wick. And it's just indicative of the fact that of those two, the NASDAQ is showing more bullish intent, if you will. And the same is also true over on the ES. Again, quite a small wick, quite a wide body. So again, it looks as though it's shaping up to another potential move where the NASDAQ is trying to lead the others higher. In terms of the 5-minute time frames, what are we actually looking at? Well, again, it's back to multiple time frames. We've got a lot of price resistance overhead. We've got this red line, which is very wide. And for those who come along regularly, oops, my headset's just dropped out a little bit. So, for those who come along regularly, you'll know this is the accumulation distribution indicator. It's based on price. So it's looking at it from the traditional technical perspective of price-based resistance and support, where a level, a region has been tested and retested several times. The greater that occurs, then the wider will be the line. So every time this is tested, it gets thicker. It's a little bit like Popeye and spinach. The more he eats, the bigger the muscles. It's that kind of thing. So these levels up here, these are relatively minor. They're still there, but they're nothing like as strong as these guys here. And these are also surrounding. So we've got resistance above. We've got a platform of support below, which we've actually gone through. We're now coming up to test the volume point of control, which is this yellow line, which is where we've got the heaviest concentration of volume. The key now is really down to volume and how the volume plays out, and whether the market has got enough volume to drive through not only the volume point of control on 5-minute, but also, just get rid of that, sorry about that, but also through this very strong ceiling of resistance. You can see it was tested here, capped it off and held, but we're now waiting to see if that's breached. If that's breached on good volume, then we could see a further move higher. And as we move higher, this volume on the volume histogram is falling away, and it acts in exactly the same way as price-based support and resistance. In other words, the more pronounced the volume, the deeper the volume, then the more difficult it is for the market to move through that, and therefore it'll need more volume, more fuel, if you will, to breach it. So that's what we're seeing at the moment on the NASDAQ. You can see on the YM we've got a bit of a way to go, but there's a big ceiling there. All right, it's maybe 70 or 80 points above, and we've got this one which is 8 points above on the ES. So if the NQ is able to break through, that's fine, but it's then going to drag these two up, and these two are going to run into difficulty here. So that's the way you have to look at the way it's shaping down at the moment. Just head back onto the multiples. I'm just keeping an eye on the left-hand side because over here, in fact, I'll pull it over in a moment for you. In fact, let me do that for you now. This is on TradeStation. This is the VIX. This is the VIX of the CBOE. For those of you not familiar with it, again, it's another powerful indicator to have if you're trading indices, futures in any great way. You need to have this up somewhere. It's an inverse indicator. So when this is rising, equity markets are falling. When this is falling, equity markets are rising. I've got this on the 1-minute, the 3-minute, and the 5-minute across the top. Down at the bottom here, I've got the Renko, which we're in the process of developing. There's a few bugs to sort out in it, but basically it's going to be run with embedded indicators because we don't have an option to enable them automatically, so we are actually going to hard code them into the indicator itself. But basically, this is the Renko. That's running at a 1 minute time frame. This is the CBOE on 10, and this is the daily chart down here. There's been quite a lot of decline, and that's why we're seeing a rally in the markets. But this is the price action today on the index, with the sharp move higher, and it's just starting to come off a little bit. We've got the trend monitor on here, which helps to give us a heads up on what is happening in terms of the trend. So if you haven't got the VIX up anywhere, I would urge you to do so if you're trading futures, certainly index futures. It just tells you about sentiment, amongst other things, but certainly that at the very least. Okay, let's just focus on the NQ. That's the 5 minute, which we looked at a moment ago. It's just coming up to the volume point of control there, so we're expecting congestion. We've got volume point of control here as well on the 10 minute, and we've got it on the 15 minute, and we've got it on the 60 minute. So there's a hell of a lot of congestion which has got to be battled through before this market is going to rally in any great way, and it's going to be all down to volume. You can see the buying that came in. This was the open. A lot of heavy selling. That was basically reaction. We saw the reaction this morning, but there was more of it as the cash markets got underway with Globex. This is all Globex volume, so this is trading electronically, this contract. It trades 24/7. And now we're running in parallel with the cash markets. We've got a big surge in volume. Heavy selling on the first one, more heavy selling on the second one, more selling on the third one. So that's three pretty straightforward candles to trade. Then we come into a doji candle, indecision. It's not indicative of a reversal, it's just indecision. Decent volume under that one, so there's buying and selling in there as well. Then we get the buying coming in under this candle, big move to the downside, rallies, good volume, lots of buying in there, and we go up to the upside. But now we're moving into congestion phase. We're at the volume point of control. We're expecting congestion purely because we are at the volume point of control. It's what it tells you. If you don't have it on the chart, you don't know it's there. I can assure you it is there. The volume is the heaviest on the chart. Expect congestion. That's what you anticipate to happen next. It's not going to go through there like a knife through butter. It is bound to congest. It may be for a short period, but it will congest, and it may struggle and it may come off there. You just have to wait and be patient. Let's pop the 5 minute up. We've got a platform of support under here, as I mentioned earlier, but we've got the volume point of control there. And we've got it on 10 and we've got it on 15. So we just have to wait and be patient. And that's where we are, just to remind you, that's where we are on the daily. So just keep an eye on that. Just keeping an eye over on the other side, what's happening in terms of the VIX. It's kind of moving into congestion at the moment as well. Let's just hop over onto the tick charts. There we go. This is basically trading on tick charts, which are independent of time. I've got 3 here, and these figures come off the tick speedometer here, which basically converts a 1 minute time frame here to the equivalent or the optimal tick setting for that particular time frame, for that particular chart. We're on the ES here, so I've set these up for the S&P 500, just to give you a different perspective. And that is where the numbers come from, because otherwise it's guesswork. If you don't know what the tick setting is for a particular instrument, and most traders don't, then it's just a guess. Haven't got a clue. What the tick speedometer does, it delivers that setting automatically. This one's at 1597 tick. This one's at, just change that over, 4181. So that's at the correct speed now, and this one is running at 10946. So it's 10,946. There we go. Just pop that one in. The reason there are 2 numbers here is because this actual number changes very frequently, and you really don't want to be doing that every 5. I was going to say every 5 seconds, but you know what I mean. You actually want to set these charts up and let them run for a reasonable period. Typically what I tend to do is, if I'm trading in Globex, when the cash markets are not open, then I'll use the actual. But when the pair of them are running as they are now, then I will use this number, which is how we devised a mechanism to arrive. It's nothing to do with Fibonacci other than it's a mechanism to derive the closest number to the actual, which is more stable in terms of the chart for when the markets are running together. You can see the color here is flip-flopping between what you're looking for here is activity. You're looking for green or orange. The red is indicative of a market that's slowing down. It's lacking pace, it's lacking momentum, it's lacking participation. This is all about participation. What a tick chart does is reveals momentum, because what you see on a tick chart is exactly the same as a Renko chart. Because there is no time element to those charts, the chart builds according to activity and momentum. If the market is fast moving, then the tick chart will build very quickly. If it's sluggish and slow moving, it'll build slowly. You don't see that on a time-based chart because it's governed by time. These charts are not governed by time. Every one of these candles here on this particular chart, 1597 tick, there's 1597 ticks gone through the market. And when that's happened, however long that takes, whether it's a nanosecond or a millisecond or a microsecond or a second or a few seconds, it doesn't matter. It will build that candle according to this metric, not time, and therefore it will then move on to the next one. So there's a lot of ticks flowing through the market. In other words, a lot of participation and activity. These candles will build very quickly, and that's the reason a lot of traders like to trade tick charts, particularly for futures trading, and also Renko charts, because they reveal that raw momentum. At the moment, it's very sluggish. You can see the indicators just flagging it. It's telling you this is running slow. This is running slow on 3 minute. This is running slow on 5 minute. It color codes as well, tells you we're in red, and it's very, very sluggish. What's interesting though is this number down here, 10,946. If this were the YM, this number would be maybe a couple of thousand, and that's the huge difference across these indices. The ES is the most heavily traded. It's massively traded by algos. They will all jump in as soon as the market opens. So there's a huge amount of algo trading going on in here, which is why the tick activity is so high. It's less high on the NQ and certainly less so on the YM. So we're in a bit of congestion at the moment. It's a question of being patient before we jump in. And what it also means is that, excuse me, if you want to trade in these sorts of congested markets, then you do have to step down to the faster time frames. You have got to step down to these very fast time frames of 15 second, 30 second, whatever it may be, to pick out trades. Because if you're trying to do it on a 1 or 2 or 3 minute, when it's moving in this sort of pattern, it's a hopeless case. You just won't do it. But you can certainly do it. Volume can be read in exactly the same way on a 15-second chart as it can on a minute chart, 5 minute, whatever it is. It doesn't make any difference. You can see here on this rally, we've got this little rally going. The volume is in line, but it's not terribly strong. Look at the last candle there, that little up candle, tiny amount of volume, very weak to the upside for the time being. We've got light support here in terms of these price-based regions. They're all very weedy. They're not thick. They may be tested once, and that's it. So in terms of a move to the downside, there's very little in the way of price to support it at the moment. And the volume is pretty lightweight too. Little bit of buying under that one, little bit of selling under that one. It's all pretty lackluster at the moment. Excuse me, sorry, just hit the microphone. And when it's trading in a range, then you've got to make some decisions. You've got to decide at what point you are going to jump into the market. If I'm looking at this as a trade to the upside, then clearly the level that has to be breached is at 80.95. If we see a decent close beyond 80.95, then that is the point at which I would probably jump in, purely because several reasons. First of all, we're starting to break away, assuming it's on decent volume. We're breaking away from the volume point of control itself. We will have cleared this massive amount of potential resistance, which then acts as support. And in addition to that, we've then got volume falling away. And finally, above this, we've got very lightweight in terms of price-based resistance to hinder progress. So if the market does manage to claw its way up here anywhere close to 8100, then that's the point at which I will be looking to get in and take that higher as the market develops. And just looking at the other time frames, just going down onto the 15, and going back to the earlier question about multiple time frames, again, what you're looking at here is you're looking at a similar thing. You're thinking, okay, well, if I get in at 8100 on a 5 minute time frame down up in here somewhere, then what is the 15-minute chart going to do to my potential opportunity to the upside? Is there a load of resistance that's going to come into play? What have I got in the way? And, how's the volume shaping up? You can see it's all falling away here. So really, you've got a straight run up to this level here, where that is where you'd run into resistance. And that is where you'd have to make a decision and say, okay, well, if I'm going to get in here, is this enough for me in terms of whatever risk I'm putting on the table in terms of my stop loss? That's the question you've always got to answer. And as Anna said this morning, a lot of traders talk about risk and reward. I have to have 2 to 1 or 3 to 1 and all that sort of stuff. I'm sure you've heard it. You may believe it. I'm sorry if I'm telling you something you don't want to hear. But it doesn't work like that. And the way to do it correctly, in our opinion, and again, it's only our opinion, we have been doing this for 20 odd years, the two of us. So, we do have a decent amount of experience. The one thing you have to do is look at the chart, let the chart dictate to you how much opportunity you've got in that particular trade. Is it worth it? What have I got that's going to cause a barrier to the move higher? And if I'm happy, even if it's 1-to-1, fine. I'll take a 1-to-1 trade every day of the week. I'll put $100 on the table and take $100, or however much you're putting on the table. That's fine. I haven't got a problem with that. A lot of traders do this. Oh no, I've got to be able to see $200 or $300 if I'm going to put $100 out. The market doesn't work like that. The market doesn't care about what you need in terms of risk or any other thing. So use the chart for what it is. It tells you all these levels from a technical perspective. I appreciate, it's not a fundamental perspective, but it tells you from a technical perspective. Markets rallied up to the volume point of control again, come into play, and it's reversing off it again. It's just that's what you expect. You're not expecting at the moment for anything else. What we're looking for is possibly a breach of this, which is a nicely developed area above on the 15-second. But if we go up onto a 5-minute, it's really getting through this level here to get to 8100. So 8100, and you might say, well, I'm giving up 15 points here. That if it gets there, I've lost 15 points in the trade. Well, yeah, but that's with hindsight. At the moment, you don't know which way this market's going to break. So it's just a question of being patient and waiting.
So, David, there's a couple of questions.
Yeah. Just open up the chat box. Apologies. Okay, right. Do you use market delta or delta profiles on the vertical axis? We just use, I have to be honest and say, we just use the indicators we've developed, and of which the volume point of control is one. And that is, we're always looking at other aspects to volume. And delta is certainly one of them, purely because probably on TradeStation. It depends on the complexity of the data feed and how sophisticated it is. You can do certain things with certain feeds which you can't do with others, and it's something we are constantly looking at and constantly thinking about. And I say with TradeStation, there are several indicators that we are considering developing for the future, and that is certainly one that we've got in the back of our minds. Because we are a volume-based company, we're always looking at other opportunities for bringing in other aspects of volume to the charting process. Do you teach your multi-time frame approach in more detail? We do, Sam. We have it is a Forex-based program. You can find it on quantumtradingeducation.com. What I would say, though, is the principles, all the principles that are taught in that program can be lifted onto any other instrument or market that you care to mention. There is obviously Forex-specific content in there, quite a lot of it, but the actual principles of trading in the style that you'll see here, it's all covered in that particular program. It's one of the other things we are considering with the education, is actually building it out to cover other markets, because it is Forex specific right now. And one of the things we want to do once TradeStation is launched is actually build out into a stock stroke investing futures type program. But a lot of those principles are identical. Volume price analysis you can apply to any market you like, as long as you've got a chart with price and volume on it. That's all you need. You don't actually need to know what's at the top of the chart. It's as simple as that. Just seeing some selling coming in here. Sorry, just cut in there. You know, very simple, nice widespread down candle, good wick to the, little wick to the underside, but no great buying. And you've got decent volume under there, so you've got decent amount of selling. A little bit of buying coming in after that one with the little hammer candle there, but it's the trend monitor's turning red. The trend line's starting to dive. It's starting to signal that this market is looking weak. Got all this resistance overhead. I appreciate this is 15 seconds, so it's bloody quick. Excuse my language. But there we go. Another heavy selling under that one. Nice big volume bar. You know, this is sell, sell, sell at the moment until the buyers come in. You know, that's where we're heading. This is what I meant. If you want to trade these markets in semi-congestion phases, then you've got to move down to the faster time frames. The moves are there. You've got to be quick, light on your feet. Doesn't suit everybody. We enjoy it. Some traders hate it. They wouldn't do this to save their lives. But that's trading. It's what you've got to find what suits you and what works for you. Let's just stay on the 15-second because it does actually move, even though the market is pretty congested. Okay, now we've got some buying coming in. Pretty good buying actually under that candle. Nice. 2-bar reversal as well. Overlay on that one. What have you got? You've got a 2-bar. You've got a single candle of a hammer, if you will. It's a 2-bar reversal. See if it's enough to push the market higher. Okay, weakness under that one. We've got a wick to the upper body. Decent volume there. Got a bit of resistance in overhead as well, helping to suppress the market, keep it down. Pivot gone in as well, signaling a move, short-term change in sentiment. Markets tried to rally. So it tried to rally. Weakness, going down again. Next level, next floor down. Here we go. More selling under that one. Just keeping an eye on what's going on. Let's just pull the, see what's going on over here. Pull this across. There we go. Got it on another screen. This is on the VIX. Starting to tick up. Ticking up here. Ticking up here. You can see the trend monitor down here has reverted back to blue again. Renko down here is kicking up again. Down on 10. Starting to move higher. Very weak at the moment. Just move that out of the way. Pop that over there. There we go. Let's see how much more selling pressure we can get. Okay, we're coming down to a low volume node now on this time frame. So there's nothing really to prevent it falling there. Just stepping down onto the 60. This candle here is a classic one. Often look for this in reversals against a bearish trend where the market's tried to rally and the weakness still remains. Good volume under the candle, nice wick to the upper body. It's what I refer to, perhaps with a little bit more of a body to it, but we refer to it as a water-filled balloon, where you're filling a balloon with water and it gradually gets heavier and heavier until it explodes. It's that sort of concept. It's just a great candle to look for. If you're in a downtrend and you get a rally and you get these with decent volume under it, it's just a strong signal that the market is going to carry on lower. It's trying to rally and it's just remaining very weak. Okay, trend monitor hasn't transitioned through to red here. It's come out of the bullish phase. It's gone into dark blue. We may go through, if we continue low, we may go into a darker red and out the other side into bright red. Alternatively, we may go into straight through. Some decent buying under that last candle there. Nice little wick to the lower body, high volume. Strong buying there. See if it follows through. It's desperately trying to rally all the time and it's just not following through. Off that candle, you want to see if the market is going to rally, you want to see the next candle widespread up with good volume as well, and just not seeing it. You're seeing the sellers coming in again. It's hit down. Having said that, the volume is falling away on those last two, so it's not following through in terms of selling pressure either. See what the next candle delivers. Trend monitor's keeping you in. Notice the trend monitor hasn't transitioned at all. We have the little rally. It's just carrying on straight through. A little bit of dark red coming in there. That may transition out the other side. Down onto 15, just keeping an eye. The VIX is ticking up. It's up to 1364 now. Trend monitor is blue on there. Just pull that over again, just to keep tabs on that one. There we go. This is the 1 minute. So trend monitor is in blue. VIX is ticking up here. Transition through to blue there. Bit of a spike up now, 1367. So that's pushing the markets lower. Remember, it's inverse. So as the VIX rises, markets fall. So it's what you're expecting to see. It's all very straightforward once you know where to look and what to do. Spiked up again, the VIX up to 1369 now. 1373, it's rising quite quickly. Renko's rising nicely as well, nice and solid. Okay. Bit of a drop off in volume there. You can see we've got 3 candles there. You've got falling price, falling volume. What are you expecting to see off that? You're expecting to see a rally. Why? Because if the market is going to fall, you want to see rising volume, not falling volume. It's exactly the same principle. In a rising market, you want to see rising volume. In a falling market, you want to see rising volume too, because it takes effort. Everything takes effort, whether it takes effort to rise or effort to fall. We all understand gravity. Intuitively, it takes effort to get something off the ground, but the same is true in trading when the market is falling. It needs effort, needs volume, needs fuel. If it hasn't got it, it's not going far. So when you get anomalous price action like that, what that's telling you is expect the market to rally. It may not rally very far. This may be it's another facet we cover in great detail in the program, is the difference between primary and secondary trends. If you understand and can identify when a secondary trend is underway, in other words, it's a pullback and not a reversal, that will help to keep you in the primary trend for so much longer. It's just so important, and that's done through the prism of volume price analysis. VIX has spiked up again. It's up to 1381 now. Dropped a couple of points down to 1379. Volume point of control has dropped. You can see it. It actually dropped when I was talking. The volume here, we're now moving to congestion phase. One of the other facets we teach is to understand pivots here. These are very simple. They just work on a 3-candle principle, but the way we use them, not only to identify intraday changes in sentiment, short-term changes in sentiment at any rate, but also help to explain when a congestion phase is building, the precursor to it, as they appear. We've got a pivot low, then we get a pivot high, okay, possibly congestion, then we're going to pivot low, pretty much the same region. So we know we're moving into congestion. The volume point of control is confirming that. Trend line is rising. And that's what we're waiting for. We're waiting for a move away from that particular congestion phase. We're waiting for other pivots to develop. Let's see how far this rally goes. Trend monitor is just starting its transitional color change. You can see the trend line is starting to rally a little bit. Volume is pretty low though. Look at the volume here. It's not great. The selling pressure is pretty light as well. See how the selling pressure is diminished as well. And if you align that candle over here, here we had pretty heavy selling in this region. And now in this region, which is exactly the same price area, it was pretty low. What that's telling you is, it's a more subtle technique, if you will, but what it's telling you is we've gone into an area that was high volume and has now become low volume in terms of selling pressure. And therefore what that tells you is that the selling pressure in that area has diminished and likely to be drained away. And therefore we may well see a reversal into a bullish phase, because the selling pressure here is not the same as it was here. In other words, it's all been absorbed. Trend monitor is now transitioning through to bright blue. And there was some buying coming in on this candle, and also some buying coming in on this candle. If this is to develop into anything half decent, then the volume needs to be a little bit stronger than what we're seeing at the moment with the associated price action. The VIX has, sorry, darling. The VIX has come off. We're back down to 1371, so we spiked down from 1380 down to 1371. And that's why we're seeing this little rally develop. Anna's just highlighted that David left some comments in the chat. Excuse my bad typos, and probably no worse than mine, David, I can assure you. Let's just have that. David, thank you. I've 100% vouched I lifted my forex skills into futures, hard and breakfast, right? Commodities quickly and successfully. Fantastic. Just a joy to hear. I think I'd also echo on someone who trades these fast times that there's not always a trade. Pick your moment. Sometimes lots of trades are now, sometimes none. Patience. Absolutely. It is about patience. The fine line is always between patience and having the, say the bottle, but you have to jump in at some point. That's always the fine line. You can't wait for perfection. If you wait for perfection and everything to align, then you'll almost certainly be getting in when everyone else, or certainly the market makers, are getting out, and vice versa. You have to go in at some point. You make that decision. You have your stop losses in place, and you just get on with it. It is that routine, and I can't describe it in any other way, that once you do this regularly, it does become like that. It becomes routine. And the thing is that you have to accept a loss. You have to be able to take a loss and just ignore it and move on. Don't brood about it. Don't let it worry you. Don't think the market's made you look stupid. Market doesn't care. Your broker doesn't care. Nobody cares except you. Just get on with it. Do the next one. Keep the losses small. And the key thing is to try and hold the positions to maximize whatever it is that you can from a position for as long as possible. And part of that is to do with understanding the difference between primary and secondary trends, which is a great application of volume price analysis. It's probably one of the most powerful applications, simply because it then gives you the mechanism and the tools to allow the mathematics of trading to work in your favor. Because if you're taking small losses, which we all do, then that's fine. That's part and parcel. But if you can't maximize those bigger winners, then it's never going to outweigh your smaller losses. So you get your trading account will kind of bumble along and maybe sort of decline slowly over time. It's not going to collapse, but it won't move forward. The way it moves forward is when you have some small losses, and then you then lump in a decent big winner. That's the key. Volume price analysis helps you in that respect in terms of understanding the difference between primary and secondary, and also, of course, the tools and indicators. One of the reasons we developed Trend Monitor, to try to take a more considered view of the trend to help to keep you in. And going back to the first question, using it in multiple timeframes is so powerful, because you will get changes on the faster timeframes, but if they don't ripple over into your trading window or out to the slower timeframes, then it's just simply a pullback reversal, and the primary trend has not been breached. Just keeping an eye on what's going on the VIX. It's gone into its shell a bit. Let's pull that over. There we go. That's the Renko, see, moving up nicely. It's still rising. This is on the day, a tiny wick to the upper body, so it's still pretty negative. And until that starts to reverse more strongly, then the bearish sentiment is going to maintain hold for the time being. Push that back over there. Let's go and see what's happening. I'm just going to have a quick look at commodities. Some decent moves in both oil and gold earlier on. That's oil at the top. That's the December contract for the WTI. So that's on 1 minute, 5 minute, and over on the daily chart there. And this is gold down at the bottom here, which has had a decent rally. Certainly this morning, been under the cosh for some time. But again, it's another market, on a broader time scale that's in congestion. That's the daily chart for gold. Really is in congestion. The volume point of control, lots of resistance above. Very little in the way of support below, but it's one of the issues we highlighted with gold. Has many different facets. I won't go into them now, but certainly the dollar relationship broke down recently. It's kind of coming back a little bit. These relationships come and go. They're not cast in stone. Commodities up, dollar down, and vice versa. But it's broken down. It may be coming back to re-engage a little bit, but there's so many other drivers for gold at the moment. and as indeed there always are. Just go back on, just go a quick look on, see what's going on in terms of currencies. These are the individual currency charts on 5-minute time horizons. This is the yen, the dollar, the euro, and the British pound. And again, from a sentiment perspective, another chart you'd have up, you'd obviously have the yen up, because you want to see what risk on and risk off sentiment is doing. And this is pretty much, it's indicative. This is the big buy in the Japanese yen. That was reflected in a big fall in equities. Now we're starting to see it reverse a little bit, go into congestion, rallying, reversing, what have you. There's no strong pattern at the moment to really reflect that in terms of the yen. And obviously the Aussie yen is one in particular that's a good proxy for risk, which we use a lot for giving us a heads up on flow. Because this business is just about flow. It's just about making money, whether you want a higher risk, higher reward, or you want lower risk, lower reward. Is money chasing safe haven, or is it looking for risk? That's all it's about, whether it's in bonds, whether it's in equities, whether it's in commodities, or whether it's in currencies. It's as simple as that. That's all this is about. It's just a constant flip-flop between risk on and risk off. And all the markets are related. There's another facet we cover in big detail in the relational aspect, the relational module in the Forex program. Okay, let's head back. A quick call on the tick charts. And you get a sense of this tells you instantly that you know the market is pretty sluggish right now. This has gone to 987, the 1 minute. So this was 1597. We've now dropped to 987. We're flip-flopping red and orange. This is 2584. This was 4181 before. And this was up at 10,900 odd. This is now dropped to 6765, which is pretty low for the ES. This can get up to 20 odd thousand from time to time when it's really rampaging. And at the moment, it's pretty sluggish. And that's what we're seeing. Pretty sluggish markets. Let's go back onto time-based charts. There we go. We've got levels building here on 15 second. We've got the volume point of control. We've got volume building here as well. Nevertheless, that was a decent move. That was from, where were we? 86 down to 74, 72, all the way down to 66. So, as I said earlier, if you want to trade in these markets, then you're going to have to go down to these fast time frames, pick out the trades, and be light, very light on your feet. That's where we started. Anna and I started, believe it or not, in the futures market, trading FTSE 100 futures. And it was £10 a point. Yeah, it was $13, $14 a point. This is over 20. This is practically 20 years ago. There was very little internet. It was all done through satellite feeds and what have you, and it was all done over the phone. We would pick up the phone, ring the broker. The broker would place the order onto the floor of the exchange. You'd hear all that going on the squawk, and by the time the order was filled on the floor, the market will have moved on, and you may even have been stopped out. It was that slow, if you will. But that's where we started. Hard stops, 5-point stops. Didn't even bother looking at the chart. We just put a hard stop in. That was it. You just rang the broker, placed the order, filled at 5-point. That was it. Buy or sell. But it was a great way to learn, and we loved it. But that's where we started. Very unusual. I think most traders probably start in, I don't know, with maybe some knowledge of stocks or perhaps in Forex, whatever. But that wasn't the way we started. That was all good fun. 2 huge monitors which weighed an absolute ton. They cost a fortune as well, I seem to remember. We had a satellite dish on the outside of the house, and it was all very funny. Special phones and direct lines and God knows what else. Oh, sorry about that. Okay, go away. Anna says the YM's died as well. Yeah, it's not great. It's just very weak at the moment. That's on the 60. Tried to rally up there. Good volume under there. You know, it's giving a signal. This is pretty weak. There's no great incentive to buy at the moment. Trend monitors transition through. We've had that burst of activity. We went into the bullish phase. Now we've come out on the other side. Excuse me, I'm just going to switch off a minute. Sorry, don't want to hear me coughing in your ear. That was a little rally, and it's I guess this phase of price action here, you're looking at something and you think, is this going to go higher? And really it's what the trend monitor is about. It's trying to keep you in. It's trying to signal whether this move has actually expired in terms of upside momentum. Never actually got into bright red at this point. It went dark red, and you might have been thinking, do you know what? I think this is going to reverse. And then it comes out the other side and goes back into blue. And then we get the transition through into the other phase of price action where we've gone dark blue into darker red and come out the other side into bright red, which is the classic pattern. It doesn't always do that, but really that's what it's about. And it's just trying to help you to stay in the position to maximize it for as long as possible. And it comes back to using multiple time frames. It's so, so important. Now we've got some more good levels in here. Very strong resistance overhead, 71 and 73. We've got the volume point of control here, which may move if we can just around this region. The volume point of control, it's not a static thing. It will move according to the build up in volume as these volumes change up and down the chart. It's all about time. The longer phase of price action sits at one region, then that volume will build. Have a look at the 10-minute. I've looked at the 10-minute for a while. This is more like the balloon, the sort of candle I was referring to, this sort of water-filled balloon where you get a rally, tries to rally, falls back exhausted, closes, and you get this nice big body and it's filling up with water, and then you're looking for a bang on down to the next level as the balloon explodes. Silly analogy, I know, but there we go. I like analogies. Just having a look at the VIX, it's ticking back up again. It's gone up about 10 points, got down to 1362, it's up at 1376 again. I know we've got quite a lot of new people here. Just pull up some of the, just while that's, keep an eye on things. If you're not familiar with us, this is who we are. This is Anna's site, annacooling.com. You'll find all the books there. This is where we do a lot of market analysis. We've got box sets here as well. They all go through to Amazon. And you'll also find lower down, you've got all the Facebook pages as well. The Quantum Trading Facebook page, Anna's Forex Facebook page. We try and keep them reasonably up to date with things as they're going on in the market. This is where you find all the indicators at quantumtrading.com. We currently have all the indicators for MetaTrader 4.5, NinjaTrader 8, 7 and 8, and also TradingView. As I say, we're working on TradeStation right now. It's a lot of work. It probably won't be available until the early part of next year because we have all the support pages to do, videos to do. We've got other indicators which need debugging, all sorts of things. But it will appear here, and we'll keep it updated in the Quantum Labs, which is labs.quantumtrading.com, which I've got up at the moment. You can invest in one indicator. You can buy bundles of indicators. The one thing that's universal is that you only pay once. That's it. You get 24/7 support, and it's genuine 24/7 support. You'll get answers on Saturday, Saturday night, Sunday morning, whatever time, because we have customers all around the world 24/7. That's what we offer. So you will get an email back pretty quickly, whatever time of day or night you email us. It's as simple as that. So it includes everything, includes the support, includes all the upgrades. So it's upgrades whether an indicator is upgraded or whether it's a platform upgrade that we have to deal with. You never pay us any more. It's as simple as that. If you invest in a full package, you get all the future indicators we develop free of charge. It's that simple. It's just our way of saying thank you to you. And in terms of the education program, this is the Forex education program. These are the core modules: psychology, fundamental, relational, technical, and mechanics of trading module. And then below that, we have a huge array. We've got VPA chart examples. There's a massive number of examples in there. How to use the indicators, pulling it all together to get started trading. We've got a vast array of webinars that we recorded with all sorts of topics in there. They're in the library as well, and then there's a resource section as well, and you also have access to the VPA trading room, which I've got up here, which is hosted by us, so it's all there. VIX is still climbing. It's back up to 1378 again, which is why I was seeing this weakness come in here. Just pull it over once more, just as we start to wrap up. There we go. You see the Renko down here, and the VIX is climbing across the time frames, spiking up there up to 1381. So it's just following through on the weakness that arrived this morning following the comments and the uncertainty over China and the US trade. How are we doing for time? Any more questions, by the way? Okay. Yeah? No? Oh, okay. David, thank you for that. I didn't know that. Using Ninja, they have a similar approach that once you're invested in the platform, any upgrades, you don't pay for it, etc. Terrific. Thank you for that, David. Much appreciated. I didn't know that. It's a model that we like. It's our business model, and we try and be fair to all our customers. And whatever you buy from us, you will always receive a credit. If you buy an indicator and you want to upgrade to a full package, or you buy a couple of indicators and you want to go to the full package, or maybe the education program, you will always receive a credit for what you've purchased. It's as simple as that. And also in transferring from platform to platform, if you have them on Ninja and you want to ultimately transfer to TradeStation, no problem, we don't charge, we just do it for you. There may be minor differences with indicators sometimes, but we always try and do it as I can't think of the word, as equitably as, thank you, darling, as equitably as possible as we possibly can. And if there isn't a precise match of one indicator that maybe you've got is not replicated on another platform, we will always, generally speaking, we will recompense you with other indicators in some way. So there's no cost in transfer. A lot of our customers start with MT4, MT5, and they then migrate up to NinjaTrader. They want to trade futures, maybe trade indices, commodities, whatever it may be. But they learn their skill on an intuitive, all-in-one solution. And with MT5 you've got multi-asset availability anyway, and it doesn't come at the same price as a futures contract because you're not trading with the baggage of having to put up large margin requirements, which you do with futures. So it's a great way to learn. You'll have all the markets there. You'll have the indices. You'll have the commodities. Pretty much all the brokers are starting to offer MT5 now because it's just a replica of MT4, and they ironed out a lot of the things that prevented traders using it, and now it's very popular. So it's a multi-asset platform, exactly the same look and feel as MT4. You've got a much broader array of timeframes to choose from, and it's a one-stop solution. So you get your charting, your brokerage, and data feed all thrown in one. Yes, you pay for it in the spreads, but then there's no such thing as a free lunch in this business. Sorry, I'm keeping an eye on what's going on. Sam, how much does a complete forex trading package cost? It includes. It depends whether you go on the NinjaTrader or the MT45 or TradingView. The reason TradingView is the cheapest is because it doesn't have all the indicators. TradingView, and it goes back to what I was saying earlier about the flexibility of what we deal with as developers. The Pine script is not as flexible, doesn't have the power of MetaQuotes or of Ninja, or nothing like a TradeStation either. So some of the indicators we couldn't port, for example, the currency matrix, currency array, and one or two others as well. In terms of the MT45 package cost, it's $13.91, but that includes all the indicators. So you're getting a full package of indicators which are bundled at $894 on the quantum trading site, and then the education element on top is just $497, works out at $13.91. And the NinjaTrader equivalent, because the NinjaTrader package has an additional indicator in terms of tick speedometer, because MT45 doesn't offer live tick, whereas NinjaTrader does, has the tick speedometer I showed earlier. that is 1694, I think, off the top of my head, forgive me, but the actual educational element is 497, and then underneath that is just whatever the cost of the full package of indicators is. I hope that makes sense. But it's all here on quantumtradingeducation.com. Sorry, wrong one. There we go. quantumtradingeducation.com. And here we are down here. Those are all the prices there. Whereabouts are we? You have to click on the buttons, but that's I can show you that those are the prices. But it includes all the knowledge and tools that you need. More congestion, I'm afraid. And it's the same on the VIX, as you can see. Just pull it across, there we go. That's what we're seeing on the VIX, trading in a 10-point range at the moment. Renko's moved into congestion. Congestion on 3, congestion on 5, and we've got indecision on 10 with a, looks like a, no, we don't sell the education on its own. The program includes all the indicators. You have to buy the indicators, and the educational element is 497, but we don't sell the educational element on its own. It includes the full package of indicators. We'd sell it as a complete package with the indicators because they are part and parcel of what we teach in the program. How are we doing for time? Oh, gone way over time. Apologies. It's building into another classic congestion phase, and again, it's defining your levels. Very strong platform of support in below, strong ceiling of resistance, volume point of call, slap bang in the middle. If you're going to trade this as breakaway, where are you looking for? You want to get out somewhere around about here. If it gets down to that level, it's downside, upside. You want to get through this level here, through there, and then off and away. Some buying coming in onto that candle. Look at the volume under it. It's actually the highest volume we've had pretty much, well, certainly in the last 20, 30 minutes at any rate. Bigger than this guy here. So we've got some decent buying coming into there. So we're looking for a rally now off that buying. Hitting resistance up here. Doji candle. Indecision. So it's all pretty sluggish. Anything going on in the world of gold? Okay, I'm just going to pass back to Anna for a change of voice because I've been rabbiting on for far too long, as usual. Gone way over time. Apologies about that. I lose track of time. All right, let me pass back to Anna for a moment. Any more questions? Okay, I hope we've answered all those for you. And I'll pass back to Anna. And I will see you next week. Thank you for your time. Hope you've enjoyed it. And I'll pass back to Anna.
They were saying it's getting dark now outside. Well, yeah, so our clocks have gone back, but I don't think they've gone back in the States yet. That's why we're sort of 2 hours. That's why the markets have been open as long as they have. Normally we start when the markets have just opened in about an hour. Okay, we're back on my MT5 platform, and I've actually got a little profile that I've put together for gold because the number of instruments that a lot of MT5 brokers offer these days, if I show you very quickly on the market watch, Goodness, these are just all the stocks that they offer. You've got all the, obviously the forex ones, and it just goes on and on and on and on. And it's got gold, silver. It's got the indices. It's got the cash indices. As I said, it's you know, the markets are accessible to everyone these days. You don't have to have certainly. You know, you don't have to have huge pockets because some of the futures contracts can be a little bit expensive. Although having said that, I believe the CME now, have they got micro contracts? We look at the E-mini, we trade the E-mini contracts, usually for the YM and the NQ, and latterly the NQ, but they have now introduced micro contracts to encourage more traders to participate in the futures market, and that obviously means that your margin requirements aren't going to be as onerous. In other words, you don't have to have such a huge deposit. Right, same setup. I've got a Renko version of gold. I've got the 3-minute, I've got the 12-minute, and I've got the hour. And for the hour is a very interesting chart because this a piece of price action here is actually from yesterday's Fed. Yesterday's Fed was FOMC was really interesting because when he started speaking of the statement, and then especially the statement, it sounded as though he was actually being quite hawkish. So if you have the Dixie or you watch the dollar, which I hope you do, you will notice that the dollar started to climb quite, you know, quite nicely. The euro dollar fell quite smartly, and the dollar rose. However, as the statement, you know, as the markets absorbed what he was saying, it was actually quite dovish. And what has happened is with gold, gold has recently kind of fallen out of correlation with the US dollar. As the dollar has fallen, that has really been the excuse, the catalyst for gold to start moving up. And as I said right at the beginning, the trading conditions that you're facing on this chart, now on the hourly chart, we obviously had the congestion that often happens, or often always happens, before a major news release. Then we had the first reaction, and then we started, once markets kind of assimilated what he was saying, gold started to move higher. And this is the hourly chart. The trend actually started further back here before this period of consolidation. We've got the trend dots changing blue. We've got the trend monitor moving bright blue as well. We do have these, it's quite a volatile, there's volatility within this period of congestion, volatility, a compression of time, pretty wide range in the candles. The volatility indicator triggered. Then we had the wait for the Fed. We saw the volume falling on these two very narrow spread down candles. That was the reaction. The next candle is also a volatility candle, and then once that volatility, the top of that volatility candle was taken out, we've had it moving steadily higher. We've had a little bit of congestion in Globex, and then higher, and it's actually gone. It's topped out now at 1514. So this is the hourly chart. How we see that represented on the 12-minute chart here, we've got it going right back here at just under $1,500 an ounce, and we've got a nice move higher. Now, what's interesting with the VPOC, when you have trend in this in anything, and you obviously can't, you may come to your computer and you think, oh my goodness, well, I've missed all that move. That's a very nice move, 1500 to 1509, that's $9. That's a nice move in gold. What do? Well, the other way of using something like the volume point of control, there's areas on the chart where you get these congestion phases. Basically, when it moves to there, that could also be, not only tells you that the price is actually maybe aiming for it or coming back down to test it, but it's also be a potential re-entry to the trend that we have seen in the slower time frame charts. What is very nice on this, we've actually got a nice hammer candle here at the bottom of this little secondary trend. This is the primary trend higher. This is the secondary pullback, if you like. Here we have the hammer candle, lots of buying underneath that candle, and we know that it's going to push up. Now, where is it going to go? Well, obviously, it's got to go through 1514, which is the high of the session, to move, to carry on higher, as it were. We go back to the hourly chart. Where is the VPOC? Well, the VPOC is actually still back here, which is where this nice move also originated from. Very clearly marked here on 1514. With support and resistance, we simply keep going up the time frames to find where this move is likely to pause, slow down, you know, come to a stop for whatever reason. So we've got the, I'd like to go, let's see what the daily chart says. This is the big up candle on today. The volume is slightly less than that one, which is not always a good thing from a VPA perspective, because what you want is, with a candle of that size, you really want to see an awful lot more volume than that. The good news is it's actually bounced off the VPOC at 14.94, roughly the $1,500 per ounce region. And I suppose on the daily, what have you got? You've got 15.27 up ahead. We've got this minor resistance that's been taken out. Let's move it down. Let's go to the 4 hour, see if we've got some other levels. Yeah, was here 15.17. This is this high from the 25th of October. So that's a reasonable target, if you like, price objective. What's also nice is if you look at the histogram on the volume point of control, you can see here this is much narrower than it is at this point here. This is what we call a low volume node. This is a high volume node. Low volume node means there is, if the price manages to get through there and up to that level, it's going to go through fairly fast, because there's no density of volume as resistance to hold up the price as it moves higher. Much longer term, let's go to the monthly chart here, and let me sort of shrink that down a bit. If you recall, if you're a gold trader, this is the, where are we, October, this is the August candle, which actually sort of rocketed up, and it resulted in this volatility candle. In other words, it was outside the average true range, which is unusual, very unusual for a monthly candle. And this candle itself is also acting as support and resistance. The reaction that you get from a price action perspective when you get volatility is you get this retrace to within the spread of the candle. Now, this is the month. So last month it wasn't a very good month for gold. That is tradable on an intraday basis. Longer term, this is what we expect. This is the resistance now at 1564, roughly in that area. Now it's had a little bit of a boost higher because of the US dollar. But for longer term, if this trend that started off the volume point of control right back here at 1265 is to carry on high, it has to take out the high of this candle, this strong resistance. And where's it going next? Well, you know, we've got 1686 and way, and then we're right back up to the good old days of 1900. And, you know, okay, Powell may have said that there's no inflation, but there are lots of other problems out in the world at the moment that could be positive for gold. It all depends on your time horizon. As a trader, you have to be aware of what the charts are telling you in the different time frames, and you basically play them accordingly in the time frame of your choice. Anything you want to add to that, David? No. That's it. That's it. We're done. Enjoy the rest of the trading day. If you want any further information on what we've said or any of the indicators that we've shown here, you can either drop me a line, anna@annacooling.com, or david@quantumtrading.com. Tomorrow is, well, it's Halloween today, last day of the month, of course. Tomorrow is non-farm payroll, which is always great fun. And we'll see what happens then. And then we are moving into November and December. My goodness, it's probably going to get even more exciting, as they say.
December's always great for trading.
Pardon? December's always great for trading. Always been great for trading. So whatever happens, we will be here. We'll be back next week for more. The 2 webinars, London Forex in the morning and this session in the afternoon. So we'll catch you at one of those next time. As I said, enjoy the rest of the trading day, the rest of the trading week, and we'll see you next time.